issuing bank declines, do not honors, 05 declines, general declines. These are all essentially the same thing and mean that your customer's bank has declined the transaction. Now, if you're an online business owner and you're getting a lot of these messages, today I'm going to talk to you about ways that you can effectively reduce your issuing bank declines and obviously capture the most amount of money and increase your approval ratio. My name is Maria Sparagus. I am the founder of Direct Payment. This is a company that works with thousands of 7- and 8-figure merchants, and we help different business owners figure out how to lower their decline rates and how to get effective and reliable payment processing. Today, I really want to dive in issuing bank declines. Now, they're called a few different things depending on what payment processor that you're working with. But, like I said, common one is issuing bank decline, do not honor, general decline. You might see the code 05 there. So all of these are different ways of saying the same thing, which is essentially your customer's bank is saying, no, we don't want this transaction. Now, this is different than, for example, insufficient funds. Insufficient funds is saying your customer's bank saying, hey, this guy or this gal has no money for this transaction, so we're declining this. It can be possible fraud or suspected fraud. It could be, card CVV is not matching what's on there. All that stuff are valid decline messages that you may have less control over, right? So if somebody has no money in the bank or the credit card is overdrawn, there's really nothing that you can do unless you lower the price to try to capture any kind of money that they may have. So issuing bank declines are a type of decline that, you can partially fix, meaning you can get better. You're never going to get, no issuing bank declines or no do not honors, but there are some steps that you can take to actually improve and fix some of these error codes. So now that you know what an issuing bank decline means and a do not honor means, you understand that this message is coming from your customer's bank. So what you can do obviously is limited to actions that will satisfy your customer's bank, because it's not your payment processor that's declining the transaction, it is your customers. So one obvious thing that you can do, and if you are working in a high-ticket environment where you're talking to your customer and so forth, and you get that error message, you could actually just ask the customer to call their bank and tell them that, hey, this is a valid transaction, I would like it to go through. So obviously this is not possible in lower ticket offers and so forth, but if you're in a high ticket environment or a B2B environment, then it's a totally valid thing to do. And your customer obviously may be okay with it and call, and that would solve the problem for that transaction, for any future transaction probably, because it's been whitelisted. Now, for everybody running an online business where transactions are happening automatically in a gateway on a checkout page, and obviously you can't tell your customers to call their bank immediately and so forth, there are still a few things that you can do. So first things first, and this is very easy, collect as much information as possible on your customer. So if you are, for example, a digital content business, you may be in the best practice of saying, I'm not going to collect an address. Now, for ease for your customer, that may make the checkout process faster and have them, check out a little bit easier. But if you don't send an address to the customer's bank, they are more likely to decline it. Same thing with CVV, which is the 3-digit code on the card. So having a full address and having the CVV and sending that information to the customer's bank makes them feel reassured that this is a valid transaction. They are more likely to come back with an approval. So if if you're really weary of saying, hey, I have a digital content product, I really don't need people's physical addresses because I'm not mailing them anything. One thing you can do to test it out is try to at least collect the zip code. The zip code will at least give you a partial address verification match, and that may work. But ultimately, if you can collect all of the address, the full address, and at least do a zip code match to make sure that a zip code matches, but you're sending a full address, that would be your best bet. And now for your CVV, the 3-digit code, you have to make sure that it matches. If it doesn't match, then you should be rejecting the transaction. And in your payment processing gateway, you have these features to say, yes, I will accept this transaction, or no, I won't. So those two things, a full address and a CVV code should be pretty much, a staple on your checkout page. And if you're really weary of collecting a full address, try to at least collect the zip code on there. And most people, by the way, now have these tools where it autofills the address. So it's not as big of a deal as it was a couple of years ago. A couple of years ago, you'd have to sit there and type out your address. And if you were on mobile, it'd be a little bit, annoying and long and so forth. Where now, Apple, iPhones, and most phones in general have autofill functions where you just tap a button and it fills all the information. So, test it out, but I don't think in most cases it will affect your conversion ratios. And, try it out, test it, A/B test it with your current page. You'll get more approvals. I'm very certain by doing this, and you likely will not encounter too much customer resistance by gathering that information. Most customers are very used to adding their address on a checkout page when they're buying something, so it's nothing new for them. Now, in addition to this, and one thing that you should do, regardless of whether you have subscriptions or not, because you may have customers that repeat orders and so forth, you want to vault and tokenize your customers' data. When you send a tokenized transaction to your customer's bank, they will appreciate, the extra step that you did to secure the transaction and customer data, and they are more likely to approve. So if you're not tokenizing or vaulting your customer data, get started on that. All gateways offer this service at this point. And if you can take it a step further, there is Visa tokenization. It's called network tokens. If you do have access to network tokens, or you can use a third party that would give you network tokens, you can go ahead and start using that, because that's even better than regular tokenization. I'm not going to get too into it. It's a little bit higher level for more experienced marketers and business owners, but take a look at what a Visa network token is. And if you can implement it in your card, go ahead. It will actually help you quite a bit increase your conversions, specifically if you have subscriptions. But even if you don't have subscriptions, you have customers who come back and buy again and so forth. It will make the process a lot easier for them to check out, and you will get higher conversions. Now, talking about subscriptions, if you do have subscriptions, you should be tagging the transaction as a subscription. So if somebody comes into your front-end card and buys a product for $67, for example, and then you have a subscription thereafter, that second transaction should be tagged as a subscription. Your shopping cart or CRM should be tagging transactions properly, so your customer's bank can know, hey, this is not a new transaction. This is a regular purchase from a merchant or a business that this customer has already engaged with, and they are more likely to approve that transaction. Obviously, if you've done CVV, address verification, tokenize the transaction in the first place, it will give you even better chances, but make sure that you are tagging transactions as a subscription in your shopping cart. So when it is sent to your payment gateway, your customer's bank will understand that this is a regular transaction and the customer has already engaged with you in the past. I want to talk to you a little bit about MCC codes, or merchant category codes. A merchant category code is a 4-digit code that your payment processor assigns to you that basically says what type of business you are. This is a very important code. So whether you're working with Stripe or a merchant account provider like Direct Paynet or any other merchant account provider or payment processor, they will assign you a 4-digit code. This 4-digit code has a lot to do with your approval rate, because different industries have different approval rates based on previous risk and historical data. So make sure that you know what your merchant category code is. And if it's not applicable to your business, contact your payment processor and explain to them that that's not the code. You're not, for example, a merchant selling in direct response, you're actually selling SaaS or whatever the case is. If it's not the category you should be in, you should contact your bank as soon as possible. Make sure that they assign you the correct merchant category code, because it does affect your approval ratio greatly based on algorithms that they have and previous historical data on merchants in that category. Now, if we take it a step further, if you have a high risk merchant category code or MCC code, you are more likely to suffer from higher declines, especially if your tickets get higher, meaning if you have ticket sizes that are over $1,000, for example, and you have a high risk category as your MCC code, you will suffer from more declines. Also, there are some merchant category codes that will do way better with transactions under $100. And now I'm going to list a few, like for example, if you're an adult merchant or if you're doing anything like in terms of a psychic hotline or any kind of like phone service, that's a 5967 merchant, and 5967 merchants convert way better when the ticket sizes are under $100. Same thing, for example, if you're selling supplements and so forth, you're going to see your conversion rates skyrocket if you have under $100 products. Now, I know it's not always possible to be selling something under $100, but if you're debating, for example, between $105 and $95 or $98, go for the $98. You will see an uptick in your conversions, and it ultimately will benefit you having that lower price point if you're in a high-risk merchant category code. Now, especially if you're in a high-risk merchant category code, the steps that I mentioned above about address verification, vaulting, and CVV should be top on your list to make sure that you maximize your conversion. Now, also talking about your merchant category code and your transaction limits, there are certain transaction limits that have been assigned to you by your bank, and you should respect those. If you told your payment processor, for example, that your maximum ticket is 500, don't start selling stuff at 700. They have things programmed into their system saying, what is your average transaction amount? What is your highest ticket amount, and so forth. So you may be getting artificial declines because you are not following what you've already advised them. So if you did your application a couple of years back, go back, dig up your application, take a look at what you wrote in there and make sure that it's still valid. If it's not, contact your payment processor and tell them that you've had some pricing updates, you've changed your products or services, and you want to update your file. Usually it's not a big deal. If you've been processing for a while, they'll just make the updates and make sure that, they have the correct information, and that will serve you better to ensure that, there's no false negatives or false declines. Now, another thing in your gateway that you should look at is there are some default fraud filters, and there's some extra services that are sometimes added as, fraud filters that may not be working specifically for your business. Now, what I mean, for example, is maximum transactions per 24 hours or maximum ticket amount or any of that kind of stuff. Now, this may not result necessarily on an issuing bank decline, but it will result into a decline. So check your fraud filters, make sure that they're applicable to your business type, make sure that you're not imposing some bad rules and getting some false negatives in the meantime, because this is, something that some payment processors do is they have some kind of default settings in the gateways, and you're supposed to go as a business owner, as a merchant, and review those and make sure that they're applicable to you. And if they're not, and you're not able to change them, then contact your payment processor to explain to them that your business model is not well served by these particular settings. So go in there, take a look at your settings in your shopping cart, take a look at your settings in your payment gateway, and make sure that they are applicable to your business type, because I will tell you, it will cause declines for absolutely no reason. I see this all the time. Now, one thing that's important is to try to have some preventative measures. So a lot of times what happens is I get different clients and business owners that call me when their approval ratio is 50, 60%. So they're getting, 40% declines, and they're freaking out because obviously, you're paying a lot of money for your traffic. You want to try to convert as many sales possible. And if customers are landing on your checkout page and wanting to buy, but then getting a decline, that's very frustrating. So you could actually try to avoid this altogether. So if you're listening to this episode and, for example, you're getting a new merchant account, or, there's a new payment processor in your roster, try to follow some of these best practices in order to avoid this issue from happening. So payment processing works as an algorithm. If you send a lot of what we call, let's say, bad transactions, for example, with no CVV, no address, things that don't make sense on the transaction, pricing that doesn't match what was on your application and so forth, you're going to start getting more declines. And the more declines you get, the more weary, a customer's bank will be. So if they see, for example, 10 transactions from you a month and they've declined 5 or 6, when another one comes in, if they're not sure about that transaction, or if there's something strange on the transaction record, they will be more likely to decline it. So what you want to do is you want to start things off as clean as possible. So if you just got a new merchant account or you're integrating a new payment processor, make sure that you're doing all the stuff that I mentioned above. You're vaulting, tokenizing, AVS for address verification, CVV to check the 3-digit code. You're providing the full name of the customer. You're providing an email address. If you can, provide a phone number as well, so it can match up to the customer's bank records. So do as much of that as possible, especially when the account is new, because you want to have the best success in terms of your approval ratio right at the beginning. So you start things off well, so you're not penalized for sending bad transactions. And when I say bad transactions, what I mean is declined transactions, or transactions that have potential of being approved, but you didn't take all the steps to make sure to try to up your chances of approval. Now, taking that one step further, there are different services. They're called, decline salvage services, or transaction factoring services, and so forth. Now, what these services do is when a transaction declines on your checkout page, either on your front end or your subscription, because there's services that cater to either subscriptions or front end transactions. So what they do is they buy that transaction or that customer record from you, and then they try to successfully rebuild that customer. Now, if they're doing this using your merchant account, by having different methods and different things, tools that they can use in order to get a successful transaction, what's happening is they may be flooding your payment gateway and your merchant account with tons of declines. Some of these service providers that offer decline salvage services may try up to 12 times on a decline transaction. Now, keep in mind, if you recover a transaction on the 10th attempt, the chances of that customer wanting a refund or charging back are very high, because this is a customer, for example, that may not have any money or may not have wanted the product or service. So, in general, trying more than a couple of times is really not recommended. And you don't want to, push things and really try to capture every dollar, because what's going to happen is you might capture that dollar, but you will lose it on the back end through a chargeback, a refund, a customer complaint, bad word of mouth, and all of that. So use these decline services very sparingly, test them out, put some limits onto them, like tell them, you don't want them to try more than 3 times, for example. If you can, test out your own decline salvage by trying different things yourself before you go to an outside provider. Now, some providers, as I mentioned, what they do is they will buy that transaction and try it on their own merchant account. And obviously that doesn't impact you, but that does increase customer complaints, may not have the same service experience or branding experience that you want your customers to have, because they'll be dealing with a third-party provider. So, obviously, depending on what your business model is and where you're at in your business, it may not be the best thing to sell your customers to try to recover a couple of bucks. And if you do that, be wary and test it out slowly to make sure that it's going to work for you and your brand and your business. Now, last but not least, but something, again, very important to prevent is watch your refund ratio and your chargeback ratio. If you have a new merchant account or any merchant account that has very high chargebacks or very high refunds, what's going to happen is there are different customer banks like Bank of America, Chase, all the common banks. They start kind of knowing who you are as a merchant because they have your merchant number. So if you seem to be historically a merchant that gets a lot of chargebacks or a lot of customer complaints, they might actually just ban you. And what they do to ban you is they ban you for the whole BIN. Now, a BIN is a bank identification number. It is the first 6 digits of a customer card. So 450060, for example, is owned by whichever bank somewhere in New York. If that bank sees that, hey, this particular business, when we get a transaction from that particular business, it is a much higher chance that it's going to charge back or refund than most other businesses that we deal with, we want to ban that merchant altogether. Now, what they do is for that BIN number, they may block you completely. I see this all the time, and it's very unfortunate, but once you're blocked, it's very difficult to get you unblocked. You can actually figure this out on your own to see if you're blocked by any bank or any specific card issuer. What you can do is you can grab all your declined transactions, sort them by the first 6 digits of the credit card number, and then take your approved transactions and sort them by the first 6 digits of the card number and compare how many approved transactions do you have for those first 6 digits versus declined. If you have way more declines or only declines, then you have likely been blocked by that bid. And the only way to unblock yourself or make sure that transactions start being approved is to either contact that bank, and there's various ways to do that, but you can contact that bank and explain that you're a real business and so on and so forth. It's unlikely going to get you anywhere. So the only other thing would be to get a brand new merchant account with a new merchant number, and try to start fresh. So if you do that, then obviously keep in mind these best practices to avoid being blocked again. Now, obviously, I've laid out a lot of steps and a lot of stuff that you can do. So start with the basic stuff, like I said, the address verification, the vaulting, and the CUD checks and so forth. And then you can add more and more from there. If you have any questions or if you really need a deep dive into your declines to really understand what's going on and tips and tricks on how to get things better, feel free to reach out to me. My contact information is below. I love working on this kind of stuff. And I actually help a lot of merchants increase their conversions considerably. So if you have any questions or you need any help, feel free to reach out. I hope you enjoyed this episode and I look forward to your questions.